Hello and welcome to the Dinar Daily channel. Today's update brings a narrative that's been building for years, but the current signals are more distinct than ever before. We're witnessing a convergence of factors that point to significant developments. For the Iraqi dinar and the Vietnamese dong, currencies that have been at the center of global speculation. For a long time, the conversation has been filled with rumors and recycled information, but what's unfolding now feels different. The information coming in is unusually precise and points to real-world preparations, moving beyond the realm of mere conjecture. This is a story of coordination and deliberate actions from financial institutions and governments alike, creating a sense of a potential rollout finally reaching a visible stage. The landscape is shifting, and these changes are worth examining in detail. The most captivating aspect of the current situation involves the reported exchange rate figures for both the Iraqi dinar and the Vietnamese dong. For years, people have debated and hoped for a return to a stronger value, but the latest reports are pointing toward numbers that are far more substantial than previous discussions. Sources with close ties to financial operations and high-level currency groups are reportedly seeing internal data that suggests rates in the range of $6 to $8. This is a dramatic change from the current values and represents a potential for a significant revaluation. What gives this particular information weight is that it's allegedly connected to internal bank systems and rate sheets, suggesting it's not just a product of online forums but is tied to actual preparations within the financial world. The circulation of such specific information within tightly controlled systems is a strong indicator of serious, behind-the-scenes activity. Beyond the numbers themselves, the information points to a structured process for currency exchanges. The narrative suggests that these higher rates might not be universally available at any standard bank branch. Instead, it's believed that a specialized system of redemption centers is being activated to handle the volume and complexity of these transactions. The reports indicate that these facilities are fully staffed and operating with extended hours, including weekends, which is highly unusual for financial institutions unless a major event is on the horizon. The operational tempo of these centers is seen as a key signal that a rollout phase is imminent. The costs and logistics of maintaining this level of readiness suggest that banks are responding to a high-level directive, preparing for a phased and controlled process to manage the large number of potential exchanges. The process of revaluation is also believed to be a tiered one. The report suggests that private groups, referred to as Tier 3, may already be quietly undertaking exchanges under strict non-disclosure agreements. This would mean that the next group in line, Tier 4B, which represents a large community of individual holders, could be next. The timing for this next phase is reportedly very close, with whispers of notifications possibly arriving within the current week. These notifications are said to be in the form of secure links or emails that would allow individuals to schedule appointments at the specialized redemption centers. This structured approach is designed to prevent chaos and ensure a smooth, orderly process. The high activity at these centers is therefore seen as a direct preparation for this next wave of exchanges. Meanwhile, in Iraq, the government is making economic moves that align with a strategy to strengthen its currency. Under the leadership of Prime Minister Mohammed Shia al-Sudani, the Central Bank of Iraq has been given the authority to fund long-term infrastructure projects that extend beyond the typical 3-year budget cycle. This decision is seen as a sign of confidence in the nation's long-term stability. Instead of focusing on short-term fixes, the government is committing to projects that could take decades to complete, such as those related to infrastructure and energy. This shift from short-term planning to long-term vision is a critical signal to international financial bodies and investors that Iraq is a serious and stable partner. This kind of stability is a necessary prerequisite for any major currency revaluation to be sustainable. An even more significant development in Iraq is the push to create a digital dinar. This isn't just a simple update to the existing financial system, it's a fundamental overhaul. The goal is to integrate the Iraqi financial system with global protocols like SWIFT and frameworks backed by the IMF. A digital currency would bring unprecedented transparency and speed to transactions, which are qualities that foreign investors demand. It would also help to reduce fraud and create a more trustworthy financial environment. When combined with Iraq's efforts to expand its energy sector and attract foreign partnerships, the digital dinar is seen as a crucial component of a broader strategy to establish a stronger, more globally accepted currency. Analysts have even suggested that Iraq's economic fundamentals alone could support a much higher rate. Vietnam is also making deliberate moves that mirror Iraq's path toward a stronger currency. The Vietnamese economy has been experiencing rapid growth, fueled by a booming manufacturing sector and significant foreign investment. Many international companies are shifting their operations from China to Vietnam, which is boosting exports and contributing to a higher GDP. This kind of economic expansion naturally strengthens a nation's currency. In a similar vein to Iraq, Vietnam's government is also exploring the creation of a digital dong. Financial institutions in Hanoi are reportedly testing cross-border payment systems and collaborating with digital wallet providers to align their infrastructure with international standards. This modernization effort is not a coincidence. It's a strategic move to prepare the dong for higher-level trading and potential revaluation. Analysts have even discussed the possibility of the dong surpassing the $8 mark once these international adjustments are finalized. The quiet, internal adjustments happening in financial hubs across Asia suggest that preparations for a revaluation are already underway, even if they have not been publicly announced. Vietnam is positioning itself as a proactive player in the global financial arena, not merely a country reacting to external pressures. The parallel momentum observed in both Iraq and Vietnam makes the entire conversation about a currency revaluation more credible. Both nations are making strategic, coordinated decisions to modernize their financial systems, and these actions are viewed as laying the groundwork for a potential change in their currency's value. The confluence of these events across two different regions is a powerful signal that something significant may be in motion. Circling back to the operational updates in the United States, fresh reports continue to emphasize the level of preparation at redemption centers. The information circulating among staff reportedly includes updated instruction manuals, new operating protocols, and rate sheets that reflect the same $6 to $8 range for both the Iraqi dinar and the Vietnamese dong. This consistent internal information suggests that private exchanges are not only being considered, but are being actively guided by real-time data. For the average holder, this implies that the question is no longer if, but when. The timeline being discussed is short, possibly days or even hours away. However, it's crucial to understand that the process will be highly structured and invitation-based. Accessing these potential rates won't be as simple as walking into a bank. The redemption system is designed to be highly controlled and invitation-based. It will likely require holders to use a secure scheduling link to book an appointment at a redemption center. Larger holders or those seeking contract rates are expected to follow even more stringent protocols. This is why these centers are reportedly training staff and running at a high operational tempo. They are preparing for the volume and compliance requirements of a major financial event. The process is designed to be efficient, but it requires that participants follow instructions precisely when they receive a notification. This is a critical point to remember for anyone anticipating a change. Over the years, Iraq's economy has been largely defined by its oil reserves. Fluctuations in global crude prices have directly impacted the nation's financial stability, often leading to budget deficits and social instability when prices fell. However, under the current leadership, Iraq is reportedly taking steps to reduce this dependence. The government is actively working to diversify its economic base by investing in sectors like agriculture, manufacturing, and digital infrastructure. This diversification is not just a policy goal. It's being actively supported through partnerships with international bodies like the International Monetary Fund, the World Bank, and the Arab Monetary Fund. These collaborations are helping Iraq stabilize its financial planning, and encourage the growth of the private sector, which in turn reduces the country's reliance on a single commodity. By investing in a wider range of industries, Iraq is building a more resilient economic foundation. This strategic shift demonstrates to investors and global rating agencies that the country is capable of long-term planning. The value of the Iraqi dinar may soon reflect more than just oil wealth. It could represent the full potential of a diversified economy positioned to compete on a global scale. This evolution is a significant part of the revaluation narrative because it demonstrates the fundamental stability required to support a stronger currency. It shows a commitment to creating a sustainable economic model that is less vulnerable to external shocks, which is a key factor in any successful revaluation. The strategic push toward digital currencies in both Iraq and Vietnam is a clear signal of their intent to move beyond traditional financial systems. In Iraq, the digital dinar is seen as a means to fully integrate with global standards and protocols, which can foster international trade without the historical bottlenecks that have plagued the region. This move can significantly enhance trust in Iraq's banking sector and improve transparency, which are essential for attracting foreign investment. The digital currency is viewed as a foundational element that can support a stronger, more efficient, and more widely accepted form of the dinar. Similarly, Vietnam's exploration of a digital dong and its partnerships with international digital wallet providers are part of a larger plan to establish the country as a hub for next-generation financial activities in Asia. For holders of the Vietnamese dong, these actions are not merely symbolic. They represent tangible proof that the nation is preparing its financial infrastructure for a currency that can be traded and valued at much higher levels without friction. The synergy between these digital initiatives and the talk of revaluation is hard to ignore. A shift to digital finance provides the robust infrastructure needed for a revalued currency to thrive on the world stage, making the speculation feel more aligned with an ongoing global transition. The journey for many who have followed these currencies has been marked by long periods of waiting, filled with cycles of hype and disappointment. The whispers and rumors of the past often led to frustration and doubt. However, the current atmosphere is noticeably different. We are now observing the simultaneous alignment of multiple, independent factors, including credible information from banking sources, coordinated operational activities, high-level government reforms, and the implementation of digital financial systems. These elements, when viewed together, create a level of momentum and credibility that has not been present before. It's a sign that the long-awaited reevaluations may be part of a larger, ongoing financial transition that is happening in real time. This convergence of events suggests that the destination is no longer just a distant dream but is potentially within reach. The narrative of both Iraq and Vietnam positioning themselves as leaders in the digital transformation of monetary systems is a powerful one. By embracing these modern financial frameworks, they are sending an unmistakable message to the global community that they are ready to step into a bigger role. The path has been long and filled with challenges, but the current signals indicate that the preparation phase is reaching its conclusion. The commitment from Iraq's government to diversify its economy is a major factor in the revaluation conversation. By moving away from a sole reliance on oil, which has historically made the country vulnerable to global price swings, Iraq is building a more stable and resilient financial future. The active involvement of institutions like the IMF and the World Bank in this process is a testament to the seriousness of this initiative. They are helping Iraq create a more balanced economic model that supports private sector growth and long-term financial planning. The value of the dinar is now being seen as something that could be based on a wider set of economic fundamentals, not just the price of crude oil. This strategic diversification demonstrates resilience and foresight, qualities that are highly valued by investors and rating agencies. For those who hold a currency, this evolution is crucial because it means the value of what they hold may soon reflect the full potential of a diversified and stable economy. It's a narrative of a nation transforming itself and creating the conditions for a sustained increase in its currency's value. Vietnam's economic story is equally compelling. The country is a manufacturing powerhouse and a destination for foreign investment, which has led to impressive GDP growth. This economic strength is a natural argument for a stronger currency. The government's proactive steps to modernize its financial infrastructure, including the exploration of a digital dong, show a deliberate effort to align with international standards. The quiet adjustments and preparations happening behind the scenes in Asian financial hubs are a strong indication that Vietnam is not simply reacting to market forces. It is actively positioning itself to take on a larger role in the global financial system. The combination of its robust economic growth and its strategic financial modernization efforts makes the case for a revaluation of the dong compelling. The dual momentum of both Vietnam and Iraq, each making similar strategic moves, adds a significant layer of credibility to the entire revaluation conversation. In conclusion, the information coming from multiple independent sources paints a consistent picture of a financial world preparing for a significant event. From the rumored exchange rates circulating in banking systems to the high operational tempo of redemption centers and the fundamental economic reforms in both Iraq and Vietnam, all the pieces appear to be aligning. The narrative suggests that the long wait may be nearing its end. However, it's also clear that the process will be highly controlled and structured, requiring everyone to follow specific instructions. The preparation is key, and staying informed is more important than ever. The payoff for years of patience could be closer than ever before, but it will be a process that unfolds in a deliberate and managed way.